That's the very first thing that you should be looking for when you're looking at a passive investment. What most investors do when they start out, when they're new, they're looking at deals. Yeah, I got to put money in a deal. I'm a deal junkie. I need to find the highest IRR. That's the complete opposite. I should have been looking for a qualified sponsor, and we can go through what that looks like. But to keep it short, a qualified sponsor is somebody who's been in the business, I would say, for at least a market cycle, who's had investors, who's even made mistakes, but can go back and have that great conversation with you and let you know, yes, I did this, who can lay out their business plan, who can actually walk you through a deal and take time with you on the deal, right? That's the first part, the qualified sponsor. The second part of the framework is what I call the saddle. That saddle is called the alignment of interests. Your interests as a passive investor have to align with the sponsors. Now, going back to Maserati Mike, our interests did not align because Maserati Mike had no skin in the game. When the deal went bad, he had nothing to lose, right? If you're going to invest in real estate, as a credit investor, you need to understand there's a lot of risk. We got to get your money back in 2 years. Is up. When you hear the guarantee word, just please don't walk away. Run, okay? Understanding that your capital will probably be there for a minimum of 3 years, if not longer. Understanding what the fees are: acquisition fees, asset management fees, property management fees, disposition fees. Are they feeing you to death? That's what you need to understand with the coach and saying, hey, are they actually over-raising on this deal and then giving it back to the investors as return of capital, or is they calling it cash flow? Understanding these little nuances is important. So your interests need to align with the sponsor's interests. And I think the third one is the deal itself, is the horse. Now, the horse is all about buy right, manage right, and finance right. That's really about the deal itself. And as a passive investor, and even an active investor, just as an investor in real estate, you need to understand that investing in real estate is investing in a business.